Hello, Mark Melliand with Melliand Insurance. My discussion today is why every business out there, most businesses, need to set up a buy-sell agreement. And it doesn't matter the type of the organization, whether it's a sole proprietor, a partnership, an LLC, or a corporation. This is something that just needs to be done. There's many things that can disrupt the continuation of the business throughout its life. Some of these may be the death of a partner, disability of a partner. A partner may decide, hey, I've had enough. I want out of this. I want out of the business. Retirement of a partner. Let's say divorce of a partner. All these things are called triggering events, which will disrupt the continuation of the business. So a buy-sell agreement has plans in place to make sure that the business continues if anything like this were to happen. Not only that, but the buy-sell agreement is going to protect the loved ones of the deceased. So, a worst case scenario, right? If there was no buy-sell agreement set up, what would happen is the loved ones of the deceased now, they're going to have to pay, okay, whether there's a buy-sell agreement set up or not, they're going to have to pay any creditors that are out there. They're going to have to pay any debts, and they're going to have to pay the IRS. So they got taxes, debts, and creditors. If there's no buy-sell agreement set up, what may happen is not only is the family not receiving any income, but now it's going to put them in a bind where they may have to sell the business at less than fair market value. And that would be very unfortunate because their loved one put so much time and effort in building that business that they wouldn't get the maximum back from what their deceased loved member had put into the business in the first place. Not only that, but the partners, okay, now if there's no buy-sell agreement, they don't want the spouse or an outsider becoming a partner with them. So they want that interest, that business interest of the deceased partner to come back to them, where they can choose other partners, or they may want just to continue the business without bringing in any additional partners. So several reasons why you'd want, again, to get that buy-sell agreement set up. Now, for a sole proprietor, if the sole proprietor has marketable skills such as an attorney or a doctor, okay, that individual would want to find someone that's qualified that can run the business after their death. So they would want to find an employee that could do it, or another doctor or an attorney that's knowledgeable and can run the sole proprietorship when they pass on. So the targeted person, whomever that may be, they would be the owner as well as the beneficiary of the policy. Of course, the insured would be the deceased individual, the owner. And once they receive the funds from the life insurance policy in a buy-sell agreement, then they would pay the family members for the interest in the business. So that's basically how that works. Now, for a partnership, depending on the number of partners, if it's three or less partners, then you set up what's called a cross purchase plan. So in this scenario, each partner would have a life insurance policy on each other. Okay, so each partner would be the owner and beneficiary of the life insurance policy, and again, the deceased, the insured, would be the insured, and it would be just the same logical path. They would receive the benefits of the life insurance policy, pay off the deceased, pay the family members of the deceased, and take ownership of the business. Now, in an entity purchase plan, this would be a partnership or corporation or LLC, okay, where there'd be more than 3 partners, and the business itself would be the owner of the life insurance policy as well as the beneficiary, and the business would also be the premium payer of the life insurance policy. So again, when one of the partners passed on, the business would pay off the family members of the deceased and take ownership of the business. Okay. Now, the last reason why you'd want to set up a buy-sell agreement life insurance policy would be for estate tax reasons. By setting up a buy-sell agreement life insurance policy, what you're doing is you're setting a predetermined price on what the value of that business is. This is a good thing, okay? And the reason being is that if there was no buy-sell agreement set up, then the IRS, okay, itself would come in and set the value of the business, which can mean possibly higher estate taxes paid back to the IRS. So quite a bit of stuff. If you need help setting the buy-sell agreement up, we can get that done for you. My name is Mark Melliand with Melliand Insurance. Our contact number here is 972-346-4666, or you can visit our website at www.insurancemadeeasy.us, and we can help get you an attorney as well as drawing up the buy-sell agreement. Thank you very much, and we look forward to hearing from you. Bye-bye.